Your sales are coming in. You're busy, you're shipping orders, you're restocking, and you feel like things are going well. But when you check your bank account, that number staring back at you just doesn't match that feeling at all. And if I pulled you aside right now and asked you one simple question, are you profitable? Would you be able to give me a straight answer? Or would you give me a shrug? Would you say, I think so? Or would you honestly just have no idea? So if that last part is you, you are not alone. And this is genuinely one of the most common things I hear from boutique owners, right? You're making sales, but you have no idea if you're actually making money. And today I'm going to give you the one number that finally answers that question, and it helps you set a sales goal that actually means something. Let's dive in. Hey there, and welcome to the Boutique Bookkeeper Show, where we take the mystery out of your money and make your numbers make sense. I'm Megan, virtual bookkeeper and bookkeeping coach, and I love helping female boutique owners just like you finally feel confident about the financial side of your business. If you're tired of feeling anxious every time you have to open QuickBooks, or if you're making sales but constantly left wondering, where did all that money go? You're in the right place. We'll cover all things bookkeeping and taxes, all in plain English, so you can be less intimidated by the numbers and finally start to use them to help you grow a profitable boutique. So, if you're ready to stop avoiding this whole numbers thing and start keeping more of the money you make, grab your coffee and your calculator and let's dive in. Hello, and welcome to another episode of the Boutique Bookkeeper Show. I'm Megan, and today we are going to be talking about how to find your break-even point and use it to help you set smart sales goal for your boutique. Okay, real quick, a little heads up before we get into it. Last week's episode was for my brand new boutique owners, kind of a beginner-friendly starting point. This week, we're going a little deeper, all right? We are going to be doing a tiny bit of math today, but it's the good kind, I promise. It's the kind that actually tells you something useful about your business. So you might want to grab a notebook and a pen, maybe a calculator, or honestly just a calculator app on your phone. No need to go digging around in a drawer for an actual device. If now's not a good time for you to take notes, maybe you're driving, no worries, you can always come back to this one, but I do want you to actually do the activity that I'm going to walk you through here, not just listen to it. So here's the thing. The reason so many boutique owners can't answer that whole "am I profitable" question is because they've never set a sales goal that's based on anything real. They pick a number because it sounds good. They pick a nice round number like, I want to hit 10,000 this month. Or maybe they see another boutique owner post her sales number and think, oh yeah, I want that number too. And there's nothing wrong with having a sales goal. I recommend you have sales goal. But a goal that's just pulled out of thin air doesn't really tell you anything about whether you're actually going to make money or how much money you're going to make with that sales goal. So today we're going to kind of fix that. We're going to find your break-even point, which is the exact sales number where you stop losing money and you get to start keeping it. And once you know that number, you can set a sales goal that actually means something. So let's start with what break-even even means in plain English. So your break-even point is the point where your total revenue equals your total costs. So that means you haven't really made any money yet, but you also haven't lost any money. You're right at zero. You've brought in exactly enough to cover everything it costs you to run your boutique and not a penny more. So I want you to think of it as your baseline. It's the floor. It's the number you have to clear before any of your sales start turning into actual profit. And here's the part that I really want you to hear, because this is where a lot of people get it wrong. So once you go above your break-even point, yes, you do start making money, but it's not dollar for dollar. So every dollar above that break-even point, you really only get a profit at your margin rate, not the full dollar. So I know that might not totally make sense yet, but hang with me because we're going to build up to this equation and then I think it's going to click. So for right now, just know this. Break even is the line you have to cross before you are profitable at all. So to find that break even number, we first have to talk about your costs. And your costs come in two categories. You've got your fixed costs and you've got your variable costs. Now, fixed costs are the expenses that stay pretty much the same no matter how much you sell. So whether you have a killer sales month or a totally dead month, these costs are basically the same. Now, the dollar amount can change, but they are going to be things that you pay for each month. So it can include things like your rent, your insurance, all of those recurring software subscriptions and apps that you pay for every month, any salaries and wages that you're paying out, right? They don't necessarily go up or down based on your amount of sales. They show up every month just like clockwork. Yes, the amount might go up or down just based on other external factors. Maybe your advertising budget just kind of fluctuates a little bit, but it doesn't directly go up or down because of the sales that you are bringing in. On the flip side, you've got your variable costs, and these are the ones that do move based on how much you sell. The more you sell, the higher those costs go up. The less you sell, the lower they go. So your biggest variable cost here is going to be your cost of goods sold, right? Which is just the cost of the actual inventory that you sold. So if you bought a dress for $15 and you sold it for $30, that $15 is your cost of goods sold. It's what you paid for the stuff that your customer bought. But on top of cost of goods sold, you might have shipping costs and packaging costs. And the more orders that you're shipping out, the more you're spending on that shipping and packaging costs, right? All of those little polymailers, tissue paper, stickers, all of those costs move with your sales. So all of those things are what we would consider variable costs. All right, just to lock it in before we move forward, fixed costs stay the same no matter how much sales you have each month. Variable costs move with your sales. Okay, moving on. All right, so now we are moving on to talk about your margin. So don't let that word stress you out. I'm going to walk through it here. To figure out your margin, I want you to pull up your financials and look at the last 12 months. And I'm specifically saying 12 months on purpose because your boutique has busy seasons and slow seasons. You've got the big holiday rush, and then you've got the quiet months where your sales are really slow. Plus, you've got all different kinds of promotions and sales events you run throughout the year, and all of those things can kind of make your margin higher or lower in a given month. So looking at a full 12 months helps capture all of that, and it helps you get a real honest average to work with. And if you haven't been in business a full year, that's totally fine. Just use whatever time frame you have to look at. Okay, so here are the three numbers you need to pull. First, your net product sales, and that is going to be your gross product sales minus any discounts you gave, minus any returns, plus your shipping income. So that calculation gives you your net sales, which is the real amount you brought in from selling your products. The second number you're going to grab is your variable costs. So that's all those variable costs we talked about just a minute ago, adding them together. So your true cost of goods sold plus your shipping plus your packaging. And third, you are simply going to subtract those total variable costs from your net product sales, and that gives you your net product profit. Now, for your actual margin, you're going to take that net product profit and divide it by your net product sales. And that number, that is your margin. That's the percentage of every sale that's actually left over after you cover the cost of the product itself. So hang on to that number, jot it down because we are going to need that for the last step here. Okay, so this is the part we've been building up to, the actual break-even formula. So you are going to take your total fixed costs, so those are all of your monthly costs that relatively stay the same month after month, and then you are going to divide them by your margin. And that's it. So your total fixed cost divided by your margin equals your break-even point in sales dollars. So let me run through a real example so you can kind of see it in action. So let's say a boutique looks at her last 12 months and averages it all out. Her fixed costs come out to $10,000 a month. Her net product sales average $30,000 a month, and her variable costs average $15,000 a month. So first, we find her margin. Net product sales of $30,000 minus variable costs of $15,000 gives her a net product profit of $15,000. Then we divide that $15,000 by her net product sales of $30,000, and we get 0.5. So her margin is 50%. Now we do the break-even formula. Her fixed costs of $10,000 divided by her margin of 50% or 0.5 gives us $20,000. So her break-even point is $20,000 in net product sales. So that just means that she needs to sell $20,000 worth of product just to cover all of her costs and land at zero profit. Now, here's the thing that I told you to hang on from earlier. Everything above that $20,000 in sales is profit, but only at her margin rate. So let's say she does $25,000 in sales. That's $5,000 above her break-even point, but she doesn't necessarily pocket the full $5,000. She pockets $5,000 times 50% margin, which is $2,500 in actual profit. So that's the piece that people tend to miss. So obviously going over break-even is great, but the profit comes at your margin, not dollar for dollar. Now, I want to add one more layer to this because this is where I see other boutique owners get tripped up as well. So the break-even number we just calculated gets your profit and loss or your P&L down to zero, right? On paper, you've covered your costs. But there is something else to consider. You might have other obligations that pull cash out of your business that don't even show up on your P&L. So one big thing is loan payments. So if you've got a business loan, here's how you need to kind of adjust this and what you need to know. So when you make a loan payment, only the interest portion shows up on your P&L as an expense. The principal, the part of the payment that's actually paying down the balance of what you've borrowed, that amount does not show up on your P&L at all. It just comes straight out of your bank account and lowers your liability. But it's not on your profit and loss statement. So you can hit break even on paper, have your P&L sitting right at zero, and still watch your bank account balance shrinking. And that is the most confusing, frustrating feeling for a boutique owner who thinks she did everything right. So if you have any business loans, here's one adjustment I want you to make. Add up your total principal payments for the whole year, and then fold that in or add it into your fixed costs. So you're not adding it to the break-even number at the end, you're adding it to your fixed costs at the very beginning before you run the formula. And this is why that matters. So every dollar you sell only contributes at your margin rate, not the full dollar. So if you just tack the principal straight onto your break-even number, you'd actually come up short. So folding it or adding it into your fixed costs first lets the formula do its job on the whole obligation. You also might want to do something similar if you need to be paying yourself a certain amount every month as an owner, just through owner's draws. If you're on payroll, your salary and wage will show up on your P&L. But if you are not an S-Corp, if you're just a sole proprietor or single member LLC, the amounts you pay yourself don't show up on your P&L. So you also might want to consider adding any personal payments that you want to be able to take out of the business, adding those to your fixed costs as well, and kind of incorporate those into your break-even point and your smart sales goal that we're going to be talking about here in just a minute. So let me show you with another example. So that boutique that had $10,000 a month in fixed costs, let's say that she's paying off a business loan and her principal payments come out to $1,000 a month. So we add that $1,000 to her fixed costs. Now her fixed costs are $11,000 a month instead of $10,000. Then we run the formula again. $11,000 divided by her 50% margin gives us $22,000. So her true break even, the number where her bank account actually stops shrinking, is $22,000 in net product sales, not the $20,000 we started with. So that extra $2,000 in sales is what it takes to cover that $1,000 principal payment, because remember, those sales only come in at her 50% margin. All right, so now let's turn this into your actual SMART sales goal, because this is the whole point, right? You now know this boutique needs $20,000 in net product sales to break even on her P&L, or $22,000 in net product sales to actually cover the loan and start growing her cash. But we can take it one step further and make it even more useful. If you know your average order value, meaning the average dollar amount of each order that comes through your shop, you can figure out exactly how many orders you need. So let's use that true break even of $22,000. If her average order is $50, she takes that $22,000 and divides it by 50, and that tells her she needs 440 orders to hit that goal. And that is how you start setting SMART sales goals. Not, I hope I have a good month, or not, I want to hit some random round number. Instead, it's, I need $22,000 in net product sales, which is about 440 orders to cover everything and start growing my bank account, and everything past that is profit at my margin. That is a goal built on your actual numbers, and that is a goal that starts to mean something. All right, so here's the takeaway that I want you to hold on to from this episode. Your sales goal should never, ever be a guess. When you know your break-even point, you stop pulling numbers out of thin air and you start setting goals that are rooted in the reality of your own business. And the best part, you finally get to answer that "Am I profitable?" question with an actual number instead of a shrug. So if today's episode lit a little fire under you and you're realizing you want to actually understand all of this, like really understand where your money is going and how to read your own numbers, I want to invite you to my free masterclass. It's called Make Your Money Make Sense, and in it, I walk you through the 3 core financial reports your boutique has. I show you some of the common mistakes that keep your numbers messy, and I give you the simple system to stay on top of it all throughout the year. So these numbers are always right at your fingertips instead of being something you have to dig around for once a year at tax time. So if that is of interest to you, you can register for an upcoming session over at findingfreedomfinancial.com/masterclass, and I'll be sure to drop that link in the show notes for you as well. But that's all that I have for you today. Be sure to tune in next week for another episode. I'll see you there. Hey there, and thanks for hanging out with me today. I hope that I shared something that helped you feel just a little bit more confident in understanding all the numbers in your boutique business. If you found this helpful, don't forget to go and leave a rating and review on Apple Podcasts. That's the best way for other boutique owners just like you to find this podcast so I can help them feel just a little bit more confident in their numbers as well. If you have any questions about what you heard today, hop on over to Instagram and send me a DM at Finding Freedom Financial. I'll be back again real soon, but in the meantime, go implement or take action on something you learned today. I promise your future self will thank you.